Dr. O, every Monday in the Center Square and across the Center Square Newswire, you give people insights into the economy through the Everyday Economics column. You and I both have kind of weird, wacky travel weeks ahead, so we're taping this before you write the column. This is going to release on Monday. So what do you got coming? What are you working on for this week's piece?
Well, how could we start the week without talking about the Fed decision?
Well, I don't think we can. Another cut, just to tee this up. Quarter point dropped. So now the benchmark rate for the Federal Reserve is between 3.75% and 4%, which would be the lowest lending rate in 3 years.
That's right. So the policy rate's down to the 3.75-4% range. But what a meeting, right? So we had two people dissenting. We had Stephen Myron, who went to, resorted to his aggressive style, wanting a 50 basis point rate cut. And we know why, right? Because he made it clear that the policies coming out of the administration would actually lower potential GDP, lower economic growth. And so that the neutral rate is much lower than we think it is. And so he wants to cut fast. He sees this economy slowing rapidly as a result of some of the policies in coming out of the nation's capital. And then you have Kansas City Fed President Jeffrey Schmidt, who basically voted to keep rates unchanged. And he's concerned that, while the economy is slowing, inflation risks remain somewhat elevated. And so we need to pause, wait and see, especially now that we're kind of in this situation where we have no data to look to.
Yeah, it's a very, very important point. And so, we're not, I think the biggest piece of missing data here would be we don't have an official jobs report, right? I mean, and you and I talked about
inflation too. I mean, we got one, right? We got
that's fair.
Yeah, but really the measuring stick is the Fed's PCE. Is the PCE that was supposed to come out this week, and probably and did not. And so you got the jobs report, you got the PCE. Inflation is still hinting that it will be moving higher, above PCE at 2.8, 2.9%, perhaps, well above the 2% target. And, we need to know what's going on in the jobs report. So if you think the jobs report is the only missing piece of information, then, look, the last thing we got from the jobs report was a slowing, right? And I think a lot of people are starting to want to agree that the slowing is there, but with inflation above the 2% target, it makes it very difficult to justify another rate cut, right? And so I think that's where he's coming from with that dissent. And then Powell comes out and says, well, basically, he wants to maintain that optionality, right? He doesn't want the markets to run with another rate cut coming in December. And he's basically saying, look, it's kind of in the air. We don't quite know yet. We got to wait and see. Wait and see for what?
Yeah.
Look, at the end of the day, we're probably, this government shutdown's not resolved. I don't know when we're going to get any new official data.
No, and that's a straight up stalemate. I mean, so that doesn't look like a resolution is happening anytime soon, unless there's a significant capitulation on either side. And the Republicans seem like they're standing hard and fast. They want to do a clean, continuing resolution. The Democrats are still holding out for certain things to be added to this. And the Republicans are saying no. J.D. Vance spoke on this yesterday at length, as did, I believe, Hakeem Jeffries was also speaking to this yesterday too. So, where do we go from here? I mean, the next time that we'd have an opportunity to look at rates would be when at the end of November, right? I mean, basically a month from now for implementation in December. If there is no resolution, to the government shutdown, and we don't have any data, I mean, is that decision ultimately less informed than this one? Does each decision point within the Fed's decision cycle become less informed the longer that we go on a government shutdown?
I think the longer you go, the more important your model, your framework becomes, right? Your mental framework, your model, your macroeconomic model becomes, right? A government shutdown is expected to cool down spending, right? Especially from people that are directly affected by the lack of income, right? A paycheck essentially coming in. And so you have to start to think the economy is slowing, right? It was slowing before the government shutdown began, before we went, the data disappeared. It was still slowing last month when you looked at private sector data. And so I think the longer the shutdown continues, the more you have to suspect that the economy is slowing. And for that reason, I think the Fed should lean on the side of cutting, right? Play it safe, as opposed to holding the line. So that's my opinion. Other people might say, well, because there's so much uncertainty, maybe we should do nothing on the policy front, right? Now, remember that monetary policy has long and variable lags. Well, what does that mean? It means that every time I touch the trigger now, it takes time for it to actually flow through the economy and have an impact. And so, if you believe that, then the time for action is now, not waiting, because it might just be too late, right? And so that's where I stand. We want to avoid a recession at all costs, because recessions are painful. And I think it's probably better. It should be in the Fed's mind, probably better for inflation to remain slightly above target, when you know that the labor market is cooling and that there is no chance or very little chance of a wage price spiral, right? No one's going out to their boss this year and saying, I need a raise, when they can't find a job anywhere else, right? And so I think it's really important for the model to kick in, the gears to kick in Fed officials' minds, to focus on, okay, where are we headed? Where were we headed before the shutdown? Where does the model suggest we're headed to? And to start thinking about that, as opposed to waiting to see data that's probably not coming anytime soon.
Well, I appreciate your thoughts, and I look forward to the week ahead, Colin, when you have an opportunity to pen that. That'll publish Monday at thecentersquare.com and move across the Center Square Newswire. We'll call it good for now. We've got a bunch of other episodes we're going to tape today, and I look forward to getting to those. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics wherever you get your podcasts. Make sure that you listen to Dr. O and me every week on the Center Square Radio Hour.